This is Bank Nifty 1 hour chat. Here I'm going to post a long trade idea. Please note this is only for educational purpose. The reason for long post is pretty simple. You see that this is the last frequency where price has tested earlier before it make a huge bump up with double huge gap ups as price escalated towards upside. Now when price is touching the same line, it created an inside bar, this bar, and then making higher highs. Okay, so this only indicates that these buyers are now strong enough and willing to take market much further. So we can interpret that by drawing a frequency line or a pitchfork. In this case, you can see A, B, and C. Okay, so with a little bit of modification, with frequency shifting, if you see, so you see that the bottom line of this pitchfork is carrying some wonderful edge. So what you can expect is that this price has still a lot of power to transcend upside. Okay, and there's a good chance for price to reach certain levels. Let me show what is happening again in this bearish candle. When such sharp candle falls below, creates lower highs and lower lows, especially after breaking this low. Okay, so many people will tend to go short, isn't it? But that's exactly what the market makers want to think about. See the bearish bullish candle before that, sharp reversal towards upside, and this is a reversal towards downside, this bearish candle. So people think that this is going to be a crashing market, but see again immediately after there is a powerful bullish candle. So this shows the strength of buyers at this level. Okay, so wherever you enter this market, the stop loss is obviously below this low. Okay, because this is the sharpest low we can think about. The ideal low could be below this low, but the more aggressive stop loss for this long trade could be below this low. Now what could be the edge? What could be the target? Target is pretty simple. You can draw a frequency line like this. Okay, so this is the line. You extrapolate this line and place it back at this high. Okay, so this is one way to look at the target. The other way to look at the target is by simply extending the magnitude of price that has moved to this in this point. Okay, let me put say this one. So this is the magnitude of price that has happened. You simply double this range and you see that we obtain this high. So as per my analysis, the price has good chance to reach 59,137, which is this point. The stop loss is this particular low. I'm making it in say red color, and this line could be a re-entry line. Okay, we can enter right now, but then when the market opens, when price comes down, we can steadily or immediately think about going long even when the price is falling, assuming that this is a stop loss. And the entry point again I'm mentioning here with say this color. Okay, so this line could be a re-entry line, or anytime when price touches any of these lows could be re-entry. Stop loss is this red line, and the target is 59,137. So this is a 1 hour chart. It may take several days for price to reach that level, but there's a fair chance that the price reaches that level. So let us see how this trade unfolds further.